Hey guys, 3 stocks just reported. 2 of them are on my list of 30 stocks I want to own forever. The third one I just sold. We're going to go over their earnings. First one, Southwest. They reported they were expected to make 12 cents per share adjusted. They made 37 cents a share adjusted. That means after one-time charges and adjusting for different costs, they're expecting $6.75 billion in revenue, and they end up with $6.8 billion in revenues. They beat on earnings and beat on revenue. Mo, you have their earnings release out, but before we get there, let me pull up Southwest here. One of the things I do like about the earnings release, I will tell you because I read it already, but you look here right now, guys, my major play on Southwest, these margins, 2% in the last year, 2.2 over the last 5 years. But if you go look at the years before COVID, they were between 10 and 15% bottom line profit every single year. So they have record revenue right now too. So this to me tells me there might be some upside here, but it's been a little choppy since then, as you know. Let's go check out how ugly these 8 pillars are. Look at this, Mo. 1 check mark, and that's their revenue growth. This is why I tell people the 8 pillars don't tell you whether buy or not buy a company. It tells a story. With how ugly this is so incredibly ugly. All you have to ask yourself is, what the hell is going on at Southwest? Well, like I said, when I look at those bottom line profit margins, it tells me there's something amiss there, right? And I own Southwest stock. I plan on holding it, and we'll break down shortly what we think it's worth. But Mo, in the press release, I just want to say one thing. I read that the CEO's main goal is to figure out a way to get back to historical margins. He brings that specifically up in the press release, which is exactly my entire thesis on Southwest. So what are the things you're seeing there?
So just like you said, the big play is to get back to margins. If they get back to margins, it turns out probably going to be a great investment. Full year of net income, $498 million, 81 cents diluted per share. I think that the big thing for Southwest is coming down here into their outlook into the future. Fourth quarter 2023 operating revenues were a record, like you said, $6.8 billion, a 10.5% increase year over year. So I think going forward, it's a great idea for him to say, okay, I think we've met our revenue. That's where we needed to go. Now let's figure out how to get those margins back up from 2% to 10 to 15%, you know?
Yeah, exactly. And if they're able to do that,
oh, it's going to crush.
Absolutely, it'll crush. I mean, look at the current PE is 40 according to our numbers. If they're able to get their margins back to 10, that makes us 40 down to 8. Because 5x the margin, you take the PE divided by 5, you're down to 8.
And like you've talked about so many times, they even talk about it here in their press release, fuel costs and outlook, because they are so good at hedging their fuel, and they detail it here in their press release. So anybody that's interested in that, just Google their press release and figure out how to read this thing. And I mean, they do such a great job hedging their fuel.
Yeah, and by the way, the press releases are super simple to read. They do a good job explaining things. If you're going to invest in Southwest, go check these things out, understand it. The reason I like them as a company is they focus on one type of plane. They focus on highly efficient, highly profitable routes. They hedge their fuel. And before COVID, they'd been profitable, I think, 48 years in a row or something absurd like that. They're a well-run airline. They're not the typical airline, which is declaring bankruptcy every 13 weeks. So that's what I like about Southwest here.
Yeah, I always love to say it took a global pandemic for them to not be profitable for a
year.
Correct,
exactly.
It's amazing.
Exactly. Guys, stock number 2, Visa just reported they were expected to make $2.34 per share in profit. They made $2.41, beating on the EPS. They're expecting $8.57 billion in revenue. They generated $8.6 billion, also beating that. So let's see how Visa is doing after hours right now. And to see, the stock is up very little.
Yeah.
Very, very little. Okay. This company, really high gross margin, 80% gross margin, phenomenally high profit margin, over 50% profit margin. That's after paying all overhead costs, all interest costs, depreciation, everything, and income taxes. They put 50+% in their pocket. That means it's incredible, Mo. If they increase their revenue by $1 billion, half of that goes to the bottom line. That's an insane number.
That's insane.
That is absolutely insane. High return on invested capital, great brand. This is why it's on my 30 stocks I want to own forever list. I just have to wait for the right price. The question is, what's the right price? So let's check some other things out. Our 8 pillars a little with Visa, things like that, you have all the check marks here. So the ROC is solid, like I said here, but credit card companies looked at as lenders sometimes, so it's a little bit different how they view things. But either way, you're talking about a 41 PE, 38 price to free cash flow. It's high. Should you pay a premium for Visa? Absolutely. The question is how much of a premium should you pay, Mo? That's the question you ask every story out there. Every good story can justify a higher premium. The question becomes, what's that premium worth? Visa is a brand. If Visa went under if somebody came on me right now and said, Paul, Visa will no longer exist in 10 years, there's no bankrupt. What would you think, Mo?
I would think, was there a nuclear bomb dropped on the United States?
Really?
I mean,
Absolutely.
seriously, it is a company where they are a staple of this country and other countries, but especially this country.
We have our software here. What percentage of our charges here are Visa? 85%? Probably 90% are Visa charges.
I mean, I have 3 Visas in my pocket now between credit cards and debit cards.
Yeah, so do I. Yeah, so Visa is the name. It's out there. Let's see what analysts are saying about Visa going forward. Just steady, double-digit growth in EPS. $10 this year for the year ending September. And then for 2027, $14.25, a 40% increase. Largely driven because, oh, wow. I'm actually surprised, Mo, that it's only a 40% increase when revenue growth is so high. Revenue growth is double digits, and with such a high gross margin, you would think that the profit number would be that much higher, would be even higher than that.
Right.
Who knows? But so that's where we are with Visa. Again, we're going to look at Southwest. We're going to look at Visa on the stock analyzer tool in just a second. But stock number 3, Intel. Guys, the stock I used to own. I exited. I'll tell you why. Not because I don't believe in Intel, because I believe the price just got really out of hand and it wasn't a stock I wanted to own forever. So I thought I'd take my profits there and wait for a lower price if it ever happens. But Intel was expecting 45 cents per share in profit. They made 54 cents in profit. They beat there. They got 15.4 billion in revenue, and they were only expected to do 15.17, so they beat there. And they're guiding for 12.2 to 13.2 billion. Let's check them out right now after hours. Intel, holy cow, down 5.5%. Okay, so maybe they've released something, Mo. Do you see anything in their press release that talks about why they might have fallen so much?
So let's see here.
For them to beat on revenue and profit, but be down after hours means, was their guidance lower than people wanted? That might be the reason why.
It could be. I'm just going to keep scrolling down here. Everything I'm seeing is looking pretty good. But again, you said guidance. I think that's important to look into.
So look at this. For the first quarter, see, it's still growth here. First quarter of this year, guys, they did 11.72. They're now guiding 12.2 to 13.2 billion in revenue. So it's growth from the first quarter of this year, but still not what they used to do, of course, right? So look at it this way. In the first quarter of 2021, they did 19.67. So it's still 33% lower than 2021. Intel is spending a lot of money on these factories. They built one in Arizona. They built one down the road from us in Columbus. They're building one in Germany. Big money on their foundry business. That way they can build chips for other manufacturers. I like the path they've done, but also, I'm not going to lie, and this is something that I did with Meta, which I sorely regret. But again, the reason I regret it with Meta is because I want to own Meta for the foreseeable future. Intel was a play for me on a turnaround. Well, look what happened in the last 6 months. It's up 46%. Yeah. I think at one point it was down to $24 just 11 months ago. And I sold it at 49 and change. Wow. Right? So it's like, okay, my basis was 35. I made a few bucks. Let me wait and see what happens. If it goes up to 60 or 70, I'm fine with that. Now, one thing I want to show you, Mo, they did 14 billion in the same quarter last year that they just announced 15.4 billion on. So that's a 10% increase that they did versus the same time period last year. Not like NVIDIA, not like AMD. Intel's a much more mature company, yet their market cap. Here's the interesting part, Mo. Market cap on Intel is $210 billion. $210 billion. And you know what the market cap on NVIDIA is. It's like 1.5 trillion. And their revenue, it's just an unbelievable difference. There's a lot of hype around NVIDIA. There's a lot of hype around chips and AI. That's what I think has really driven up the price on Intel for quite some time. So again, That's my move. I don't like to be the guy who jumps in and out of stocks. I regret it with Meta. The difference between Intel and Meta is I'm okay if Intel goes to the moon from here because it's fine. I missed it. I got my money, made my money, but Meta is the one I regret. So let's go analyze these companies in our stock analyzer tool to determine the price we want to pay. And I'm just going to pull up the ones. So I'm going to pull up Southwest. And when I did it recently, Mo.
Okay.
I just did it this morning.
Oh, did you?
And I did it, but I didn't put any margin of safety in. I kept my 9% returns here. I did not put any margin of safety in. So I want to do that before we hit the analyze button. But I did 2%, 4%, and 6% revenue growth over the next 10 years. Okay.
The same numbers in there. Yep.
Great. Profit margin, I did 7, 10, and 13. I actually think I could go higher there because they have done 15% before. And in the years they did low double digits, that was the 737 MAX years where they had issue that cost them $870 million. So I do think 10% still being a little conservative. But I did 7, 10, and 13 for profit margin and free cash flow. What did you do?
I'm doing 7, 10, and 13 also. I initially had in there 5, 8, and 11. And my reasoning, I remember doing it saying, let's just say that they did 5, 8, and 11% over the next decade, would it still be a reasonable buy today? So I did have a reason behind it.
Okay, and I just think that's way too low. I think 8%. I think their historical average around 7 or 8%, and that's going back in the day when they had higher fixed costs, et cetera. The 10 to 15, I think, is a much more real number nowadays, but we'll see. PE, I did 15, 18, and 21. Same with the price to free cash flow for 10 years from now. What'd you do?
I did 16, 18, and 20.
Okay, so pretty much close to what I did. Now, again, desired return, I did 9 across the board. So, guys, here's what I'm going to do. I'm going to do 10, 11.5, and 13 because it still needs to turn around a bit. So I want a little bit of margin of safety in there, make the juice worth a little bit more squeeze. So I'm going to show you my numbers here real quick. And, guys, we're going to do Visa, and then we're going to do Intel next. But, Mo, look at this. I have a low price of 37, a high price of 91, and a middle price of 61.
I have a low price of about, let's call it 39, 72 on the high, 55 in the middle.
Okay, so our low and middle are pretty close to each other. Let's go to Visa. When was the last time I did Visa? Visa. Mine was January 16th, so about 9 days ago. I did the 9% I did 9% again, not putting any margin of safety in here. I did 5, 8, and 13% revenue growth. I did
2, 4, and 6.
Okay. I think the world as it grows will spend, and the GDP grows worldwide, and the number of people who become economically available to using Visa cards should add more to that. So I think the growth will be faster than we expect. But more power to Mo. This is what makes the stock analyzer tool so great. You can make your own assumptions. Profit margin, I put 48, 50 and a half, 53.
I did 47, 50, and 53.
Okay. Free cash flow margin, I did 50, 54, and 58. Because if you look right here, guys, their free cash flow is significantly higher by about 4 or 5%. In fact, last year it was about 8% higher. So I did 50, 54, and 58 for mine.
So I actually did 51, 56, and 61.
Oh, wow. You did way higher than me.
I did higher, yep.
PE, 18, 21, 24. And same with price of free cash flow. Guys, I'm not going to lie. I could see somebody justifying a higher PE than that. I could see somebody saying, I want a minimum, I want 20 because I think it's such a great company and great, understood completely. I don't blame you.
I put in 18, 21, 24, and I totally agree with what you just said.
Okay, so for desired return, I did put 9 on the low side. I'm going to put 11 in the middle and 13 on the high. Hit the analyze button.
14.
I did, my prices are 150 low, a high of 275 to 302, middle price around 200. I have my watch list at 220. That way I can start selling puts at lower prices. But this is a company that you've got to be ready to jump on it if the price falls. I truly believe that. And remember, guys, you probably won't buy it at the bottom. So be ready to buy it further if it goes down. But again, that's with my margin of safety in here. If you take the margin of safety out of there, you could probably justify the price pretty close to where it's at right now. Mo, what prices did you get?
Right. I had about 115 on the low. I'm going to call it 165 on the high, middle ground about 130, 140. But I agree with your prices way more than mine. And it's based on that revenue number that I put in.
Got it. Okay. Finally, Intel. Let's just pull up Intel here. This will be great to look at what I did in the past for Intel. This is what I love about our history and stock analyzer tool. I can pull up what I did back in December. Now, they did a 10% revenue growth year over year for this last quarter. Next quarter, it's a little bit, it's not 10%. There's still revenue growth, but it's not 10%. So I did 3, 6, and 11% revenue growth for the next 10 years.
Okay. I did 3, 7, and 11.
Okay. I did profit margin of 18, 22, and 26.
Same here.
Okay. I did free cash flow margin, 18, 22, and 26, the same as before.
Yep. Same here.
Okay. Now, for PE, I might have gone a little conservative here. I did 13 on the low side, 16 in the middle, 20 on the high. What did you do?
Starting to think we did this together because I have the same numbers.
Okay. Now for my desired return, again, where I put my margin of safety, I put 12, 14, and 16% because it is a turnaround play. So I want way more juice for that squeeze. I need it.
Okay. I did 12, 15, and 18 there.
Okay. And look at our prices. 26 on the low side, 65 in the high, 38 in the middle. I have my watch list at 30, but now that I've gotten out of it, I'm going to change that to 37.50 so I can start selling puts at lower prices. So now I'm just going to sit there and wait for it to notify me. Guys, our channel is getting even more popular. Our software is getting more popular. If you want access to all these great tools and the community, we're running a 7-day free trial, everythingmoney.com, full access for 7 days. Go check it out.